really pleased to say that the CEO of the Athens Stock Exchange, Yannis Kontopoulos, joins me on the show. It's wonderful to have you with us. Great to be having this conversation in person.
Thank you for having me.
Let's just start off with a discussion about specifically the Greek economy, and then we can expand it. 10 years ago, I was around the time of the crisis. It seemed almost unfathomable to believe that Greece could at some point be one of the bright spots of the Eurozone economy, and yet you fast forward to today and that is exactly the case. Greece has been a really good success story the last couple of years from a debt to GDP perspective, primary surplus, the whole story is there. Ratings upgrades have come through recently from the credit rating agencies. Just give us a sense of how positive the momentum is on the ground right now.
Right. So, look, the outperformance of the markets actually is not just 2023, which is a decent year for global markets. The Athens Stock Exchange was at the top in last year, which was pretty disastrous for markets too. So it was one of the few that had positive performance. And that, as you mentioned, it reflects fundamentals, right? Both on the macro side and on the micro side. The macro is, I think, the way that I would summarize it is that Greece, since 2022, is growing double the rate of the rest of Europe, and is projected to do so this year and next year, and without actually giving up much in terms of inflation. So the inflationary performance is slightly better than the average. So that combination is very, very significant here. And as you mentioned, declining debt to GDP, it's basically now an unleveraged economy. So it has characteristics, if you think of the global cycle, what are we afraid of? High inflation, the central bank reaction to that high inflation, and a slowing economy. So you have pent-up demand, higher growth than the rest. You are under-leveraged, so you don't suffer from higher rates, and you don't have inflation. So
let's go back to those credit rating agency upgrades. At the time, we all said it was a really big deal because Greece was being upgraded to investment grade. That would unlock a lot of capital into the country. Have you seen it? Has the money come in on back of these upgrades?
Well, look, it doesn't happen just magically from one day to another, but it starts a process. We have already started seeing that. Anecdotally, the reason I'm here in London is because we held a conference for Greek corporates here for international global investors, the second year that we organized it together with Morgan Stanley, and the degree of response, the type of investors that we had, the number of meetings, the quality of meetings, I think has left some very, very significant impressions.
What are some of the concerns that investors are citing right now? Because obviously the trajectory is good, but it's not completely out of the woods, as is, you could say the same for every European economy.
Sure. Look, one of the common, reactions is, if the rest of Europe, the core of Europe underperforms, what's going to happen to poor Greece? And the answer is, look, the rest of Europe has been underperforming for the last 3 years or so, I think since 19. Germany has been essentially flat since then, and Greece has, tremendous rates of growth. So I think it's something that we need to kind of rebalance a bit our thoughts in terms of what we were thinking in the past, because there's been a very significant number of reforms. I think the population and their confidence is picking up. And so there's space, there's landing space. There are concerns, as there are always, but I think you have actually surprisingly more cushion than other markets.
Let's talk about the broader environment, especially the environment for listings. Yesterday, my colleague and I, Juliana, were talking about Shein and the reports that they're looking to list in 2024. It would be a huge listing in the US if it does go ahead. But then one of the follow-ons to that discussion was whether it's the right time to go for a listing. We've had high-profile examples the last couple of months. You've got the likes of Birkenstock, Instacart. Their performance since the IPO hasn't been that great. How would you describe this macro environment now for companies looking to pursue a listing?
Well, look, you can always judge by looking backwards, and you never know what's your window of opportunity here. But I think the general macro backdrop for Greece and also the performance of the rest of already listed companies basically tells you that being linked to the Greek brand might be actually positive for for a change after many years where the perspective might have been the opposite. We've also seen significant transactions in Greece, like the disinvestment of the sovereign wealth fund in Greece from National Bank of Greece, which is a big chunk.
I also cover Unicredit, so I heard the other side of the story.
It went exceptionally well. So, and that means that the market has appetite. And I think if you have large transactions of this sort, we hopefully will have the Athens airport listing in the first quarter of next year. This attracts enough attention, and it galvanizes interest, it galvanizes capital. So that's, I think, is supportive factors. You never know. but leaving something on the table, coming with good valuation. Good valuation is key in all of this.
Okay, so potential airport stock market listing as soon as Q1, Q2 next year. That's interesting, also newsy. But I think there's something to be said for the halo effect, as you say. You know, once you start having more of these types of listings, successful listings, then other companies would be drawn in to participate as well.
The usual patterns, you have nothing or you have a lot. So yes, I think that's the bet here.
Yeah. Let me ask you about geopolitical uncertainties. Recently, we have been interviewing various CEOs. EasyJet CEO was on our show a couple of days ago saying that he's very worried about what is happening in the Middle East region. That's going to affect, obviously, travel. But I wonder, I mean, Greece is, you know, close, not extremely close, but whether concerns about the geopolitical environment is also deterring investors from, you know, trading and listing.
I think nowadays you're never far away from geopolitical noise, you know, geographically or otherwise. But look, I'll tell you an anecdote from the conference yesterday. And I thought the investor was actually trolling me when he said that. He said, like, our investment in Greece is, you know, it's very good because primarily I think about stability. I close my books on Friday, and my expectation is on Monday morning nothing would have changed. And I had looked at him a couple of times just to make sure that he was not pulling my leg, but it makes sense. That's I think so. Look, you're never far away from it, but you need a good starting point.
Relative security.
And we have that.
Well, you know, speaking of geopolitics, there's a bit of a diplomatic row going on right now between the Greek Prime Minister and our own Prime Minister over here in the UK. You worried about what that means for, you know, the state of investment between the two countries?
No, I think, look, how should I put it? When you're under a lot of pressure, sometimes you know, you lose your what's the expression in English?
Say it in Greek, and then we'll figure it out later.
You lose your marbles, is the expression.
You lose your marbles.
So,
okay.
But I think that's temporary. So I don't think that.
Maybe the marbles will come back to Greece, though.
I'm
going to get you in trouble now.
No, not at all. You know, that's what we're hoping for.
Yanis, it's a pleasure to chat to you. Thank you so much for coming on our show today.